All right, let's dive into a really pivotal quarter for Matthews International. Now, this is a company that's been going through a massive transformation, and these Q3 results, they're our first real, clear look at the new, leaner, and frankly, more focused business. So let's get right into it.
So, how did the market react? Well, the reaction was pretty immediate and, pretty loud. On August 6th, the day of the earnings call, the stock shot up, jumping as much as 13.7% during the day. A move like that tells you one thing: the market was caught by surprise, in a good way. So the big question for us is, what exactly did investors see that got them so excited?
Here's how we're going to break it all down for you. First, we'll look at the market's verdict on those headline numbers. Then, we'll get into how the company has completely reshaped its portfolio. After that, a deep dive into their two core business engines. Fourth, we'll check out their guidance and what catalysts are on the horizon. And finally, we'll wrap it up with our take, the next call.
Okay, let's kick things off with Section 1, the market's verdict. And while the headline numbers looked great, the real story, the thing that drove that stock pop, is really what's happening just under the surface.
I mean, just look at this. The size of the earnings beat here it's just staggering. The consensus on the street was for a 22-cent loss per share. Instead, Matthews comes in with a positive 49 cents. That's a huge swing. And revenue also came in strong, beating expectations pretty comfortably. So on the face of it, this was an absolute monster of a quarter. But here's where you might be scratching your head. How can you have this blowout quarter when revenue was actually down over 18% from the same time last year? Well, the answer is all about a massive strategic shift. That revenue drop was completely expected because Matthews sold off its huge but lower margin SGK branding business. The smart money was already looking right past that headline decline.
And this right here, this slide tells you everything you need to know. This is the real story. You have to look at the pro-forma number. Yeah, reported adjusted EBITDA was kind of flat. But that number doesn't include Matthews' ongoing 40% share from the business they just sold. When you add that back in to see what the company really looks like now, pro forma EBITDA jumps to over $51 million. That's up almost 15% year over year. This is the number that shows the true earnings power of the new Matthews.
So that brings us to Section 2, because this quarter was all about that reshaping of the portfolio. The goal was simple: simplify the business, and maybe most importantly, make the balance sheet a whole lot stronger.
And look, they weren't sitting on their hands. Management moved fast. The quarter was just packed with action. May 1st, the SGK sale closes. Just 11 days later, they turn around and announce a very strategic acquisition of the Dodge company. Then later in August, a planned CFO transition. This timeline shows a company with a clear plan, and they're executing it with a real sense of urgency. So what was the big payoff from selling SGK? A much healthier balance sheet. The company has already cut its net debt by a whopping $120 million this year. That brings their net leverage ratio down to a much more comfortable 3.5 times. For an investor, this one move just dramatically de-risks the entire story. All right, with the business now simplified, the focus shifts to the two parts that are left, the two core engines. You've got the super stable Memorialization segment, and then you have the high-growth Industrial Technologies segment. Let's take a closer look at both. Okay, so the Memorialization business, think of this as the financial bedrock of the company. It's incredibly stable, it just churns out consistent cash. And this quarter, they made that bedrock even stronger by buying the Dodge company for $57 million. Dodge is the #1 supplier of embalming products, and management actually called it a once-in-a-generation deal. They expect it to add about $12 million in EBITDA every year, which means it starts adding to the bottom line right away. It's a fantastic move. Now, if Memorialization is the bedrock, Industrial Technologies, well, that's the growth engine. And there's a lot to be excited about here. First, their warehouse automation business is really starting to bounce back, with orders picking up. Second, they're launching a brand new printhead product this fall called Axion. It's aimed at a $2 billion market and is perfectly timed for this huge global shift to 2D barcodes you see everywhere. And third, their pipeline for energy storage is just massive, over $150 million in active quotes right now. Of course, you can't talk about their energy business without mentioning the elephant in the room, the legal battle with Tesla. Management tackled this head-on, and I think their perspective is really telling. The CEO, Joe Bartolacci, said this, and I quote, "The continued stream of baseless lawsuits filed by Tesla only serves to underscore the strength and the value of Matthews' proprietary technology. The message there is crystal clear. You don't keep suing someone over technology that isn't a serious competitive threat." Okay, so that's the story of the quarter. But where does the company go from here? Let's get into Section 4, looking at the official guidance and the roadmap for all of us investors.
You know, the biggest takeaway from their guidance is just one word: confidence. Think about it. Despite selling a huge chunk of their business and buying a new one, management came out and reiterated their full-year guide of at least $190 million in adjusted EBITDA. Holding that number steady sends a really powerful signal that this whole complex transition is going exactly according to plan.
So looking ahead, here are the 4 key things we're going to have on our radar. Number 1, can they actually hit or beat that $190 million number in Q4? Number 2, we're finally going to get our first real look at the earnings contribution from Propelis. 3, we'll be looking for updates on how the Dodge integration is going. And 4, we're going to be watching that new Axion product launch very closely. These are the big catalysts for the stock.
And that brings us to our final section, the next call. This is where we put it all together, synthesizing everything we've talked about into a clear, forward-looking investment thesis.
Because at the end of the day, it really all comes down to one question, right? For any of us looking at this company, it's, so, what's the trade? How do you position yourself now, based on these results and this new path they're on?
Here's our call at Talk Tickers. We expect Matthews is going to beat its $190 million guidance for the fiscal year. We think the big theme from here on out is going to be margin expansion, thanks to that high-margin Dodge deal and growth in their industrial tech. With a de-risked balance sheet and a much clearer focus, we see a clear path to a $28 to $30 stock price over the next 12 months.
And so our rating on the stock is outperform. The reason is simple. The strategic pivot they've pulled off is unlocking the real underlying value of this company way faster than the market was expecting. For the first time in a while, there is a clear, believable path to higher margins, less debt, and a much higher stock price.
This is not financial advice.